Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I will be breaking down some of my favorite trades from my strategies. Now, as I am one of the only traders with a fully verified MyFX book track record, none of these trades can be made up. They're all there in my MyFX book, and I will be looking at these trades and what the market was looking like when they were executed, and dissecting exactly what kind of market structure and a price action the market was showing, as well as speaking about which strategy was applied, where it entered, where it exits, what kind of risk reward the market was providing. So this will be a quite insightful video as usual. And if you want more like these, make sure that you let me know in the comments below. Now, let's start. The first setup I want to speak about was here on gold. Now, this setup was taken with my gold sniper strategy, which you find on the website. You see a full presentation with the historical backtest over more than 10 years of data of this strategy. Now, what we can see here is that from a monthly standpoint, what we had at the time of the setup was a market which was clearly in a strong uptrend. The market was creating a series of monthly higher highs and higher lows, so it was in a very strong monthly uptrend, but no market can continue to go up forever. Every uptrend is composed by a series of impulses and corrections. So if you are in an impulse phase, what you're expecting is a correction before the next continuation to the upside. Dropping down on the weekly time frame, what we can see is that we had a market which at the time we were around this area here. We had the impulse to the upside and the market just started the correction. So what you would expect in this case is a deeper correction, because after such a massive impulse to the upside, again, you expect a correction. No market can continue to go up in a straight line forever. That is not simply sustainable. And at some point, the market will become overextended and need a correction. So remember, in every uptrend, you are expecting corrections along the way. You are not expecting the market to just go up in a straight line. Even this one, which is one of the strongest trends we had in recent history, actually in quite a long history on gold, is composed by a series of impulses and correction. There are several corrections along the way. It's not just a straight line to the upside. And especially if you see such a strong push to the upside, you are expecting a correction anytime. Dropping down on the daily, what we can see is that we had a market which essentially had started this new impulse to the downside. So the deeper correction completing this daily impulse correction and impulse pattern to the downside. So again, after an impulse and correction, as the market is starting the continuation lower, you're expecting a deeper push to the downside for the natural movement of the market. On the 4-hour time frame, what we had was a market which essentially was clearly in a downtrend, creating 4-hour lower lows and lower highs. The setup, if we drop down on really intraday time frames, this is where it appears very clearly. What we had here was a market which, after this impulse to the downside, started moving in this sideways fashion. Now, in a situation like this, what you expect after sideways price action, after an impulse to the downside, is essentially the continuation. This is a very clear example of an impulse, consolidation pattern, and new impulse to the downside. Now, in this case, again, the strategy applied was my gold sniper strategy. It entered here with the stop loss above here, and the take profit was around 1 to 4 risk to reward. So quite massive risk to reward, which was achieved quite quickly. The market dropped aggressively to the downside, hitting the target in not much time, actually just few hours. Let's move to the next setup. The new setup I want to speak about here is on GBPUSD. Actually, I have two setups which I want to speak about on GBPUSD. Both of them were taken with my London breakout EA. Now let's start from the first one. Well, here on the monthly time frame, the situation we had was of a market which had just created a double top. We had the first top here. The second top was here when the market failed, continuing higher. So we had a market which had created a double top and was starting to break lower. We had the previous low, which was at this level. The market was starting to break below it. Dropping down on the weekly time frame, what we had was a market which clearly was looking for a deeper test of this level. This level here was a key zone for this chart. It was acting as previous support here, again acting as support here. And what we had at the time of the trade, we were around this area. We had a market which was heading towards this zone. Therefore, there was a good probability that the market might want to go for another test of this key area of support, because remember that areas like this, very important zones in the chart, act as magnets for the price. So there was a good probability for the market to want to go and test what kind of liquidity there was inside of this zone. Dropping down on the daily time frame, what we can see is that we had a market which at the time, again, was creating lower highs along the way. Clearly, the market was creating lower lows and lower highs with good probabilities of going and testing this zone. And in a situation like this, especially if you are already starting the continuation to the downside, there is a good probability to see a follow through into this area. Dropping down on the 4-hour time frame, what we had was a market which clearly was in a downtrend as well. Also here creating lower lows and lower highs with more bearish price action possible. If we go down on the 5 minutes time frame, that is where the trade is very easy to identify. We can see that the London breakout EA executed the trade at this level with the stop above this previous high here, essentially with above the two previous highs on the 5 minutes time frame. So quite conservative if we have to look at the market structure. And the risk to reward was quite nice. We were looking at more than a 1 to 3 risk to reward. And essentially in just few hours, the target was hit with a nice 1 to 3 risk to reward on this setup. Moving to the next setup for GBPUSD. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. The other setup that my London breakout EA triggered was when this strong level of support and demand was getting broken to the downside. So as the market was breaking below this support and demand, the London breakout EA triggered a short. Now, let's go and see what kind of short it triggered. Well, from a 4-hour perspective, essentially what we had was a market which was continuing to trend lower, even though we were inside of that support level we have just identified. We had the first test, which was a nice rejection to the downside. However, after that, sellers seemed to remain in control of this market, continuing to create lower lows and lower highs. And in fact, inevitably, as they were continuing to push the price lower, buyers ran out of steam and the price managed to break below the zone. Now, keep in mind, in a situation like this starts to show that sellers were always in control of this market, every time creating lower highs and lower lows. Now, with regards to what kind of setup the London breakout EA triggered, it essentially opened a short as the market was breaking below all the support, which was around this area, when even the very last level of support got broken to the downside. This stop was above the high. The risk to reward was a nice 1 to 3 risk to reward, which obviously when there is such bearish price action and bearish momentum, the price moves quite quickly, especially if there is a historical level of support like the one that we have just identified, which gets broken to the downside. Usually the reaction to that is quite harsh. So you see strong pushes, and that is exactly what we got here. In just few hours, the 1 to 3 risk to reward was achieved. The last setup I want to speak about is here on USDJPY. Here, I want to also speak about the COT aspect because I think it is quite important. Now, the strategy that was applied here is my Terminator strategy. Again, as for all my strategies, you find them on my website with full presentations of them and also a full historical backtest of that strategy on real market historical data. So anyway, going back to it. For this setup, I want to discuss also the COT aspect because it was a very clear signal. What we had here for the JPY was institutions rotating essentially to the bearish side for the JPY. This data is from the non-commercials, so institutions that are in the market to actually make money, not just for other commercial reasons. Now, what we have here are net positions going from 179K all the way down to 79K. So essentially a 100K decrease in net positions with institutions shorting the JPY aggressively, increasing their shorts from 21K up to almost 100K. So clearly institutions were moving to the bullish side for USDJPY by shorting the JPY. Because if institutions are shorting the JPY, obviously they are longing USDJPY because all currencies on the spot are traded against the USD. Now, what we had here was a market rejecting historical monthly demand and support with institutional buying as the market was rejecting the monthly demand and support. This area was already acting as support and demand across all this time. Actually, here we have multiple years in which this level has been acting as monthly demand and support. The market was already rejecting the zone to the upside. In a situation like this, you expect more bullish price action to be created away from this level. Dropping down on the weekly time frame, what we had was a market which had just created a successful inversion of trend and structure. The market went, in fact, from the creation of weekly lower lows and lower highs to then creating this triple bottom at this zone and then inverted to weekly higher highs and higher lows. This is a very popular way for the market to invert trend. You are essentially having a market creating lower lows and lower highs, so sellers are in control of this market. Then the market in 3 occasions fails in creating new lower lows. At that point, you have the inversion of trend and the market starts creating, in this case, weekly higher highs and higher lows. So perfect inversion of trend from a weekly bearish market to a weekly bullish market with a triple bottom being the inversion pattern. So in this case here on the weekly, everything continued to be quite bullish and the market is pushing higher. Dropping down on the daily, what did we have? Now here on the daily, we had a perfect impulse to the upside, correction, and the market was continuing with the next impulse phase to the upside. That is the situation when the trade was executed with my strategy. Now, in this particular situation, I also made a full breakdown of USDJPY when the market had created this impulse and correction, explaining all the reasons for which I was expecting this continuation to the upside, which is in fact exactly what the market gave us. And to see the actual setup, we have to drop down here on the 5 minutes time frame, and we can see the context in which my strategy executed the trade, which was when we were seeing this massive push to the upside, breaking above this previous high. That is when the trade was executed with a nice wide stop loss. More than 1 to 2 risk to reward, which was basically achieved in just few hours because this push to the upside was quite aggressively as the market was already in an impulse phase, as we have just seen by looking at the daily time frame. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.